Good morning, class. Today we are going to look at the components of a financial statement, and this is the last video in this chapter, and we are going to explain the components of a financial statement. In our last video, we discussed about the users of a financial statement. And here we are going to look at the components of the financial statement. Under the component of a financial statement, IS1, you said that some components that have to be included to be called a financial statement. The full set of financial statement. That is according to IS1. One we have one statement of financial position, statement of financial position. Number 2, we have statement of profit or loss and statement of profit or loss and other comprehensive income. Number 3, statement of changes in equity. Statement of changes in equity. Number 4, statement of cash flow. Statement of cash flow. Number 5, have notes to the account. This is the full set of financial statement, and we are going to discuss this in this our video. First, we have to start with the statement of financial position. What is the statement of financial position? What is a statement of financial position? This statement of financial position is a list of assets and liabilities of an entity at a particular date. This is the statement that shows the assets and liabilities of a business. And under the asset, what do we have under asset? Okay. We have assets. Assets is something that an entity owns, a resources that is controls, or something that is in the possession of an entity. And assets are presented in the financial statement. Okay, financial position under 2 main categories. We have current assets and non-current assets. The asset is presented in statement of financial position in these 2 categories. This current asset, they are the assets that are expected to provide economic benefits in the short term. This short term means within 12 months. This is the short term. What about non-current assets? These are the assets that have a long useful life and are expected to provide future economic benefit for the entity over a period of several years, usually more than 1 year, one and above. That is non-current asset. And it's also, we have now liabilities. As I said earlier, it's just a presentation of asset and liabilities. So we have now seen how asset is presented in the statement of financial position. So it's categorized into two. That is where we have current and non-current asset. Then what about the liability? Liability is an amount that the entity needs to settle to another party. That is a liability. And we can define this. I'm just trying to give you a summary of the statement of financial position here. Then this liabilities too is divided into two. We have current liability and non-current liability. The current liability is the liability that is the amount that is payable, like what you need to settle within 12 months. That is current liability, and this is 1 year and above. That is non-current liability. And under that, we now still have equity. We have equity. Equity is the residual interest in the business that belong to its owners or owners of that business after the liabilities has been deducted from the assets. What is left is now equity, and that equity is what now belongs to the owners of that business. And sometimes this equity is referred to as the net asset of a business. Net asset of a business means assets minus liability. That is a net asset of a business. Under this, equity is also presented in financial position. It is equity. Then we are going to look at the format of this financial position. The format is we'll have let's say statement of financial position. This is the format. This is just the format. You have your assets. Once you have your assets, you have your naira here, you have your naira sign here. Under assets, as I explained earlier, I said it's categorized into two. We have non-current and current asset. Let's start with the non-current. There are non-current assets. That non-current assets, what do we have? We can now say we have let's say land and building. We have plant and equipment. We have motor vehicle. Have this, you have this. You will now have your total. You will have this. Then you can now have under this, you now have current assets. You now have your current asset. Under current asset, we have inventory. Inventory is this. You now have receivables. Receivables is this. We have cash. Cash is this. And you have your total. What you have, you bring it here. Then you are now at this plus this. That is your current asset plus non-current assets. You will now have your total assets. This is your total assets, which is this. This is your total assets. Then now move to equity and liabilities. Equity and liability. Under equity, we have owner's capital. You can say equity, owner's capital. You have this. We will now have a non-current liability. Non-current liability. Have non-current liability. Your non-current liability, say we have bank loan. This is your bank loan. Can now bring it here. That is your bank loan. And what do we have? We have current liability. Our current liability, under current liability, we can have a bank overdraft. Bank overdraft. We have this. Trade payable. Trade payable. We now have this. Whatever you have, you can now sum it and bring it here. When you bring that here, you can now have your total. That is what you will now add here. You add your equity, non-current liability, and current liability. This is where you now have your total equity. Total equity and liability. And then your total equity and liability must be same with your total assets. So if that happens, you are on track. This is the format of financial statement of financial position according to IS 1. Then we are now going to look at statement of profits or loss and other comprehensive income. Now we are going to look at the format. Under this statement of profit or loss and other comprehensive income, this is where we are now going to look at the income and expenses of an entity, and the difference is what is known as our profit. So now let's look at the format. Have your naira sign here. You first have a revenue. Your revenue, let's assume this is your revenue. You now bring your cost of sales. Your cost of sales, what do you do to your cost of sales? You now less your cost of sales from your revenue. Whatever you have, you now put it here. This is your gross. This is your gross profits. Under that, you now have other incomes. if you have other income, what you will now do, you now bring your other income here. Under incomes, what majorly come here is disposal on the non-current asset. Say income on the disposal of non-current assets. Non-current asset, you bring it here. You add it with your gross profit. You now bring it down here. So after that, you now bring all your expenses. Now bring your expenses here. You will have employees salary or employees costs. Anyone? Now bring this is the cost. Have depreciation of non-current assets. You bring it. Rental costs, you bring it down here. And we have advertising expenses or costs, you bring it here. You have your selling costs, you bring it here. You have general expenses, you bring it here. After that, all your expenses, you sum all your expenses. The total of your expenses will now come here. What will happen from the total of from this your profit, what you have here, you now minus this your total expenses from it. What the balance you have is either your net profit or loss. So this is the format of statement of profit or loss and other comprehensive income. Now we are going to look at when we still have a statement of changes in equity. Statement of changes in equity and also statement of cash flow. We still have a note to the account. Statement of changes in equity is by how your equity is changing from last year to this year. It is a statement of changes in equity, while statement of cash flow is showing the flow from your investment activities, from your financing activities and the rest. Then under that we now have a note to the account. This note to the account is just a note that is explaining some calculations, what you have on the face of your financial statement. You now put the details in your note to the account and some information that are not on the face of financial statement. They are stated in the note to the account. Or if you need any details of a particular statement or figure on the face of your financial statement, you can go refer that back to the note to the account, how they arrive at that figure. And I think this is where we come to the end of this class. And in our next class, we are going to read chapter 2 of this financial accounting. Thank you so much.